Traders, let's jump straight in, guys. So today what I'm going to be doing for you is I'm going to be running you through one of our absolutely fantastic trades from this Friday. And this trade actually ended up getting a good 180 pips, which of course is a fantastic trade. Now, you guys know that I like to put a lot of information inside the groups. There's education, there's training courses, but I also understand that piecing a lot of these different elements together, it can be very, very difficult. It can be quite challenging to actually take all this information, compile it onto your own trade. So what I'm going to be doing for you today is I'm actually going to be taking some of these elements and I'm going to be breaking down this trade and showing you why we got in, what we looked for, and of course why we got out. And also, you know, our trade ended up being 180 pips, but the TP2 wasn't 180 pips. And it's about knowing how that trade is going to continue going, how you know when to either cut your losses, not your losses in this case, but, you know, jump out the trade or identify when the trade is actually going to keep going. Now, as I always say, nothing here is an exact science. This is a perfect example, but this is something I'm going to be doing frequently for you guys going forward, because I used to do this a lot. I used to do the trade breakdowns. You guys used to love it, and I haven't done it in a while. And I think I'm putting too much reliance on everyone just kind of piecing a lot of the information together. So going forward, I'm going to be jumping into the trades, I'm going to be breaking them down, I'm going to be showing you why we entered, and even I'm going to show you some of the losses as well. I'm going to show you why the analysis was right, but for whatever reason, it just didn't play out. I'm trying to really zero in on the reasons why these things didn't happen. This is going to be super, super useful for you guys, because when you can actually see it happening, and I'm going to try and do it as in real time as possible going forward. But as you can see me breaking it down, entering the trade, going through it all, it's going to give you a lot more confidence, I think, to actually jump in on these yourself. Like I said, guys, if you're not someone who wants to sit here and watch this, all the information is inside the group at any time. You can always jump in there. The course is completely free. And of course, the free group, you have a free trade every single day for you to use as ever you want, no strings attached. But anyway, without any further ado, let's jump straight in. Let's have a look at the chart. So guys, here we are. We are on XAU USD. We are on the 1 minute time frame. Now we're scalping here. This is why we want to be focusing on the 1 minute time frame. Of course, you do want to incorporate the other time frames as well. That's very, very important. Why? Because we want to understand the overall direction of the market. We want to understand which way the trend is actually going. Now, I'll take you to the higher time frame later, but for now, you can see that we have placed this trade while in a downtrend on the smaller time frames. Now, why is checking the other time frames important? The reason that it's important is because it gives you an idea of the overall trend. Now, gold, as you guys know, can be a real fickle. It can turn around in you in 5 minutes. So typically speaking, you want to be trading with the trend. If you're going to be trading against the trend on the small pullbacks and everything like that, there is ways to do it. We do it quite a lot in the groups as well. But you just want to make sure that if you're a beginner and you're, not familiar with the markets yet, you want to be making sure that you're getting the highest probability of success. How do you get the highest probability of success? You want to make sure that you have different elements or confluences, as we call them, and you want to make sure that they are all saying the same thing, or at least most of them are saying the same thing. If you take one element and it says one thing, you might have less than a 50% chance that it's going to be correct. If you take 4 or 5 elements and they're all saying that they're going to be the chart's going to do the same thing, you're then heightening your probability to a much bigger percentage, like an 80% or something like that. And one of the main things, especially with gold, is trading with the trend. If the trend is moving downwards on, the daily, the 4 hourly, the 15 minutes, of course, that it's going to heighten your probability if they're all moving in the same direction. So I'll take you to the higher time frame in a minute, but for now, I'm just going to show you the different elements. So what do we have right here? This is consolidation. What is consolidation? For those of you who don't know, consolidation is kind of like indecision. It's where you're not getting a super trend either way, really. It's just saying the market's traveling sideways, doesn't really know what it's going to do. And you can see I've boxed off this area here. We're not really getting higher highs or higher lows. Everything is just sort of like moving within this area here. And you can see right here, the candles have gotten very, very small. So they start off with these big strides. This is indicating that we've got half decent volatility and there could be a move. But then as it gets smaller and smaller, it shows you that there's less volume being traded in the market. There's less, action about to happen. So these are areas that we don't really want to trade. You can trade, the bounces off the top and the bottom, but that's not really what we want to do, because if we do jump in and then we hit this area where there's low volatility, and low volume very, very quickly, we're going to end up in a trade potentially for a long time where we can't actually do anything with it. You know, you're going to end up just kind of going back and forth, and you could be stuck in that trade all day. So we want to avoid these areas right here, but this is a perfect indication for us, because we know when we get a breakout right here, that is going to be where we can actually make our move. Now, it's not going to be the only thing that we focus on. We obviously want to take in a lot of different elements as well, but it's a very good indication that we're about to start a new trend, or we're going to see a big volatility spike in one direction or the other. And that is exactly what we got right here. This is our breakout candle. This one broke out, and then we have this big engulfing candle right here. Now, some people would have said, okay, let's jump in straight after that candle. The reason that I didn't jump in straight after this candle is because you can see the wick traveled all the way down and it went all the way back up. So what does that tell us as traders? So basically, you understand the different, I'm going to explain it quickly in case we've got some beginners here, but the body of the candle, this thick part here, this is where price actually started and ended. The wick is where price traveled to, but didn't quite make it. So you can see it tried to drive all the way down here, but it wasn't successful. And then there's a very big pullback on that candle as well. That indicates that it's not really solid enough for me to want to jump into that trade yet. Sometimes I do. Sometimes if I'd have seen this candle, this big breakout, and we'd have had the body of it end all the way down here, that might have been substantial enough for me to actually want to do it. Then we have the next candle, we have something quite similar. And then on the next candle, you can see it's retreated back quite a bit. The next one is this doji candle right here. The doji candle, let me blow this up for you, is this one right here where it has the almost non-existent body and then it has a decent wick on either side. This is another indication of indecision in the market. This is where we might see a reversal. This is where the market doesn't really know what it's going to do. That indicates to me that we're going to have a reversal. So yeah, we could have got in here and we would have got some half decent equity out of it, but we decided that we wanted to go for the big fish. You know, you guys know how we like to do it on Friday. We like to get like a nice 100 pip trade out. So this was my aim for this one on Friday. Now, we've had this indecision, and then you can see we did have a reversal. We can see the candles going straight back up. So that's not good enough for me. I don't want to touch this trade now. And you can see we've had another kind of doji. It's got a smallish middle, and we've got a big wick on either side, and we've had a rebound. Same thing again here, and we've had a rebound. Now, what made me want to get into this trade right now is because you can see we've now had an extra confluence in on this trade. We've got one tap on this line and two taps on this line. This is a minor resistance level. This is basically what we call a double top. This shows us that price has tried to breach this limit not once but twice. It's a very good indication that we're going to have a reversal. So now we have the breakout in the downtrend that's showing us that things are going to be moving. We have this double top. We now have another doji candle right here, and now this was where I really wanted to get on it, because we have trends matching on the higher time frame, which I'll show you in a minute. We have our consolidation breakout, we have candlestick and chart pattern. The next thing that we might want to incorporate on here is an indicator. So let's go to our indicators list. Let's go for the volume indicator. So we put our volume indicator on, and you can see at the bottom right here, this indicates the volume actually being traded. Now you can see during our consolidation period right here, the volume candles are very low. This is very low volatility. But we can see right here that it's starting to build up. We've had this big spike here, and you can see the candles are double the size that they were back here. So it's showing that there's high volatility in the market, and this is a good indication that there's going to be a big move. Get rid of this for a sec. Next indicator we might want to choose, let's have a little look at the RSI. Now, for those of you who don't know, the RSI is a overbought and oversold indicator, and we can also incorporate an EMA, an exponential moving average, on this as well. Now, even though we're not in big overbought territory, which would normally be a no-no, you can see that on this doji right here, we've had this crossover of the EMA. So we can see our RSI has crossed down over our EMA. This indicates that there's going to be a sell move as well, a bearish move to the downside. Move this again. So we've got lots of confluences there all of a sudden. We've got the higher time frames, we've got the consolidation breakout, we've got the candlestick and chart patterns, and now we've got two indicators all singing the same tune. So what do? We jump in straight after our doji candle. I got in at this mark right here, around 3285, 3286, something like that. And you can see the trade. Now, it's not the best risk to reward ratio. A lot of people kind of give me a hammering for, you know, the risk to reward ratio that I actually put on sometimes. And there's a very good reason for why I use this kind of risk to reward ratio. And it's because I understand how gold can be. I understand that the volatility with gold is crazy. And sometimes if you're not giving yourself enough stop gap, there will be a big volatility spike and it can take you out. So you can see the first spike that we've had was right here. And that's how high price did actually go. So I'm making sure that my stop loss is well above that, so that there's no chance, or there's a very slim chance of it coming up and testing that boundary. And this is what I mean about probability, guys. Yeah, it's not just about like risk reward. It's about, okay, if I do put my stop loss, like, and make it a 1-to-2 ratio or something like that, what's the probability that it's actually going to stop me out? So I'm going to back test that. I'm going to see how many times this actually happens. And I've been trading gold for a long time, so I understand the different limits. And sometimes I'll even move it even further. It doesn't matter. As long as I'm protecting my position and I have the probability on my side, then I'm going to let things run. And as you can see, we got a nice move here. And this is our TP2, which would have taken us right here. Now, why did I set my TP2 here? Because of course we have this candle right here. This is where it bottomed out before. So I want to make sure it's just a little bit less than that and around this kind of area right here, because probability suggests that it is going to test the support and resistance again. Support and resistance is very useful. It sounds like Fugazi. It sounds like something that's not going to be that important, but you can test any currency pairing as far back as you want. You'll see its importance, and it's very important to make sure that you set your trades in line with these limits, because it will always test it again, and it'll always test you. And yeah, if you're not being too careful and you want to try and get too much profit out of something straight off the bat, then of course you run the risk of getting stopped out. Now, does this mean that we're completely out of the trade? No, of course not. Like, if I'm happy with my my profit there, fair enough, I can have the day off, I can go home. If not, I might take my stop, I move my stop down here to my break even mark, and then I continue the trade. So that means that even if the trade goes bad, I'm not losing any money. It's now becoming a risk-free trade. Or I can even set it a little bit higher just to play it safe. Then what I'll do is I'll layer my trades. As I'm going, I see, okay, this could potentially keep on going a lot further. So I'm going to continue to lay out my trades, and I'm going to produce more entries so that I get more equity out of this position. And I'm going to scout the trade as I go. I'm going to keep on moving things down and down and down. I'm going to make sure I'm protecting my position. I'm keeping an eye on everything. I'm not just setting it and forgetting it. I'm scalping the trade as I go, removing profit from the trade. So even if things go tits up at the last minute, I've already secured my profit out. I'm going to take a bit of a hit. I'm going to take a slight loss, and that's it. So how do we know that this is going to keep going? Well, you have the obvious. You have the fact that we have these big engulfing candles which are still moving out of it. So I could have got out the trade right there, and then I probably would have got in again at the start of this candle right here. So in the end, we did take it all the way down. This was like a 180 pip trade. So how do we know it's going to keep going? How do we know when it's going to reverse? Now, that's when we can take it to the higher time frame. So if we now stick this on a 1 hourly chart, again, we can see, just to kind of reinforce what I was saying before about the higher time frames and how it's all important, you can see, out of the way, what we got here, a very big drive to the downside. This is our downtrend forming. Again, what we noticed before, we have a double top pattern right here. And of course, if we put on the volume and the RSI, we'd see exactly the same thing. So everything here is indicating the same thing. I also have my Jets indicator on. It's giving me the short position right there. And you can see we could have had a lot more out of this if we'd have actually inspected the higher time frame. If I'd have had this on the 1 hour, seen all these added confluences as well, could have got in probably around this area right here and had a lot more out of the trade. But it doesn't matter. That's life as a trader. You have to just kind of take the good with the bad and understand that you're not always going to catch the perfect entry. So at the moment, we're in our downtrend. We're scalping the trade as we go. We had a little bit of indecision. So how do we know where it's actually going to stop? Like, how do we know that this isn't just going to continue going and going and going and going? And of course, it's because we have our limit right here. we have the bottom of our trade. Now we can't always use the wicks. We can sometimes just use the actual bodies of the candle. Now, what do we see about these? They marry up almost exactly. And this is what I'm saying, guys. Support, resistance. This has to be the foundation of your trade. These are the fundamentals. These are the things that you base off of. So once I've taken my trade down to the 180 pips, and I'm very, very happy. I'm still scalping. I haven't set like new stop losses, new take profits or anything like that. No targets on this. I'm riding the trade. I'm scalping it as it goes. I then refer to the higher time frame. And what do I see? I see that we have reached a very significant level of support right here. And that tells me that we're going to be getting out. That tells me that it's time to get out the trade. We have a little bit of indecision here, and that's it. We're out the trade. So that's a nice little indication for you guys of how you can actually judge the trade, how to know what elements you can be looking for, what elements I look for in this particular trade, how to know when to keep riding it out, how to properly ride the storm out, and then how to know when it's actually going to reverse at the bottom as well. Very, very simple things. I'm going to be going into a lot more depth on these in other videos as well, but as it was such a good trade on Friday, I felt like it needed a little bit of explanation, because that's always what you guys are asking for me as well. So there you have it, guys, a breakdown of one of our biggest trades from this week. Now, I try and reinforce this as much as possible, but trading really is a numbers and a probability game. That's it. It's not about understanding 100% what's going on, believe it or not. It's not. It's about weighing up what you're actually putting on the chart and understanding what probability of success that's actually giving you. Not every trade is going to be successful. I lose trades all the time. Thankfully, I win more trades than I lose, quite significantly, but it's besides the point. You're not going to win every single trade. It's about making sure that the probability is there, because then you know that if you're winning 8 trades out of 10, your risk management is correct. Overall, at the end of the month, your account is going to be up. If you're risking too much on every single trade, it's going to be 1 step forward, 2 steps back. Manage your risk and understand that all these different elements come into play. Then they don't just exist for no reason. All these different types of analysis, all these different complemences that we use on here, they all just reinforce. Imagine it like you're building a house. You want to make sure that you're using the best possible product. If you just use one material to build the whole house, chances are it's going to fall down after a few days. If you're making sure the different materials that you need to give a sturdy foundation, good building blocks, and a solid roof for protection, all these different elements will make sure that your house lasts years and years and years and years. And it's exactly the same with trading. These are building blocks that you need to ensure that your trade is going to last and produce the best results as possible. And it's as simple as that. Stay tuned for the next one. I'm going to be basically diving into our best trades. I'm going to throw in any losses that come as well, just so you guys get full transparency and you understand why these things happen and why I think these things happened. And yeah, I hope you've enjoyed. Don't forget to hit the like and subscribe button, guys. There's going to be plenty more of this kind of content coming. Thank you all for watching. See you in the next one. Cheers, guys.